0.3 odd percent recovery coming through. Well, let's welcome in Rajesh Bhatia, Chief Investment Officer at ITI AMC. Rajesh, good afternoon. Good to speak with you again. And Rajesh is someone who tracks macro markets also very closely. And I think his view is formed from a slightly macro-ish perspective. And then, of course, he goes down and finds sectors and what is working and what is not. So, Rajesh, what have you made of the sort of turmoil over the last 48 hours or so? And of course, what people want to know is it now behind, or are we in a phase of slight, de-risking around the globe and here in India as well?
So, Prashant, I'd like to believe that this is a correction in India's bull market. If you look at it, just until some time ago, 15 or days or 1 month ago, US was at a new high, Japan was at a new high, crypto, gold. A lot of the asset classes were at a new high. And there has been a sudden shakeout in the narrative of all of these markets. Suddenly that risk-on trade, which had become a little more complacent, has become a bit of a risk-off trade. Not surprising then, you're seeing a lot of selling pressure. Yesterday, the FIs sold the third largest amount that they've ever sold. Clearly, there could be some kind of follow-on selling from there as well. So we are kind of witnessing that kind of a pressure. But look at how we have done. In spite of all of this global risk-off environment, what have we fallen? 4 or 5% from the top. So in spite of all of this, my sense is India is emerging as an extremely strong market. Now, how long could this last? It's anybody's guess. And there is no methodology to figuring out when does the yen carry trade kind of completely unwind. But it has happened very violently and very quickly. Which means that there should be kind of some light at the end of the tunnel, but we can't figure that out. There's no methodology to kind of figuring that out. But I know, or I am quite comfortable thinking that from a India perspective, this is a correction in India's bull market.
So since we are in a correction in India's bull market, what are you doing at ITI AMC? Are you looking to up the cash levels and maybe deploy it at lower levels, or maybe tilt the portfolio, pivot it more towards defensives? How are you going to approach the next 6 months?
So, across most schemes, we don't take aggressive cash calls except hybrid schemes where we have some cash or some ammunition, so as to say, in case we wanted to up the equity exposure. Having said that, I think we are going, and at least I as a fund manager, I'm increasingly more gravitating to one, domestic sectors. Second, I am looking at more incrementally on sectors which have greater predictability, better business models. In some sense, as I reflect on what I'm doing, I'm becoming more of an absolute return investor rather than a relative return investor in my own portfolio. So from a portfolio perspective, to answer your question, we are moving more towards the domestic sectors, avoiding global commodities, becoming a lot more conscious of export-oriented opportunities. If you look at across the region as well, what markets are correcting the sharpest? Export-oriented markets. So to that extent, I think in our portfolio, we are just carefully weighing where those exposures lie and how we should kind of maneuver them.
All right. Hi, Rajesh. Good afternoon and always good to see you. When I recall when we chatted the last time around, you said that banks is something you like. And I think you were leaning towards private sector banks, but select PSUs as well, you had mentioned, will do well. At current reckoning, how are you positioned out there? I'll tell you what, valuations of banking names are still pretty much par for the course. There's not very, very stretched on that side. The problem is the high FI holding, and if FIs are going to sell, then that could be the reason that we're seeing pressure on the banking name. So tell us your preference there, and how do you see the outlook?
No, Nigel, you're absolutely right. I think the selling in the private banks, particularly rather all the banks, is more because of the FI ownership, which is one of the largest in banks there. Fundamentally speaking, look, these banks are actually underperformed quite a lot, including some of the private banks, underperformed quite a lot. I don't, in terms of valuation also, relative to the rest of the market, they make a lot more sense. Yes, to the extent you are seeing the best of NIM margins, the best of credit costs. And as interest rates decline, which is now becoming a little more of a consensus that interest rates will decline, their asset repricing could also hurt the NII growth. Although my sense is that that's already captured in a lot of analyst estimates for these private banks. So from a valuation perspective, they make a lot of sense relative to the market. They may be at a peak of their interest margin as well as credit cost. But from a growth perspective and an ROE perspective, I would say the private banks still are going to be good, consistent compounders from here on.
Okay, got that. Rajesh, you know what, stay on. We want to talk to you about real estate as well, because there's been such a hue and cry over it since the budget, right? So we wanted to get your sense, because right now, as the rule of thumb stands, I mean, all the market pundits and real estate, experts say that the rule of thumb is that your property must appreciate more than 10%. That should be the kind of, IRR if the new regime minus indexation is to be beneficial. Now, rarely do properties give a 10% kind of a flip over a short period of time. So therefore, the hue and cry about the removal of indexation. So let's just take that story forward. We in fact have Shireen joining in, because what we're picking up is that the Finance Ministry could be reviewing the new LTCG regime for real estate. Shireen, tell us, what is it that you've picked up on the matter?
The blowback and the criticism with respect to the announcements that came in for the budget was specifically focused on the removal of the indexation benefits when it comes to the long-term capital gains regime, specifically for real estate. As my colleague Timsy has also been reporting, and what we are given to understand at this point in time, the options that are being considered by the Finance Ministry, the one that the Finance Ministry seems to prefer is the grandfathering option. Whether it will be grandfathered till 2024, July 2024, or perhaps a year beyond that, is the question that remains unanswered. But what we are given to understand is that a final decision is yet to be taken. The other option, and that is what we've seen happen even as far as the tax regime is concerned. The old tax regime continues to coexist with the new tax regime, given the option to consumers, to taxpayers, to switch depending on what they feel they most prefer. So will that be the preferred route that the government decides to take forward? We don't know yet. But again, a decision has not been taken. But these are the two options on the table that are being reviewed at this point in time. Now, remember, again, to take our viewers back to the conversations that we've been having, including with the Finance Minister and the Finance Secretary, when I put this question to the Finance Minister a few days ago, asking if the government was considering a review or any kind of amendments, the Finance Minister had said that she would speak only in Parliament, because the Finance Bill is now the property of Parliament. And when I'd asked the Finance Secretary had said that in his view, in his personal view, there was no need for a review, but he did make it clear that it was eventually going to be a political decision. So remember, the Finance Minister is expected to reply to the Finance Bill in Parliament. It was expected today. We're given to understand that's now likely tomorrow. But these are the options at this point in time. If any relief is provided, it's likely to be restricted to the real estate sector for the purposes of providing some relief that taxpayers felt was necessary on account of the indexation benefits being done away with. A final decision, though, is awaited.
All right, Shireen, thank you very much for that. Rajesh, there you go. The issue is still a very hot one. But taxation aside, I mean, how do you look at things in the real estate space? From the equity standpoint, stocks did really well. What have you made of all the noise around removal of indexation, and what's your view on the sector?
Well, from a stock market perspective, I think a lot of real estate companies have done extremely well over the last couple of years. Their pre-sales numbers have tripled. That just kind of gives you the sense of demand visibility that they have. When we speak to a lot of real estate companies, they tell us inventories are dropping. Prices are actually moving up. And their confidence in build-up of new development has gone up tremendously. So all of that augurs very well. And real estate typically is a very long cycle play. So we have begun this cycle probably 2 or 3 years ago, and probably there's greater visibility that demand is sticky and that it'll last another 3 or 4 or 5 odd years. So one way to play the real estate is through these companies. And of course, it's getting more concentrated with the organized sector. But the other way is, of course, to kind of go into affordable housing companies or, wires and cable companies, etc., which are also an equally good way to participate in the real estate cycle, which has been extremely strong as far as India is concerned.
Okay, all right, Rajesh, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV 18. and a good chat. As